let's give you some insight on the latest in the world of business. The local index is facing an uphill battle for global markets coming from the trail of destruction left by U.S. markets, which had its worst day in over 2 years after inflation numbers came in higher than expected. Jimmy Moyaha, an independent analyst, joins me now for this discussion. Jimmy, very good morning to you. Thank you for your time. Give us an overview of how the local index and currency is performing so far today and factors driving trade there.
Morning, Paul, and morning to the viewers. Early trade did start off bearish. We are seeing the top 40 sort of hold its own at the moment. We're sitting just around the 60,000 points mark, so finding a bit of support there. We have seen in the past or in recent times that in times like this, emerging market currencies, emerging market indices have performed surprisingly well relative to their developed market peers. We know that we were expecting CPI numbers out of the UK today, following the back of the numbers out of the US yesterday. We saw Asian markets down. We saw the Nikkei down. We saw Hong Kong down. We saw Australia trading down. As I said, South Africa did open in the red, but is trading slightly more positively there. The concern is, of course, that the rand is sitting ever so close to that 17 Rand 50 level, sitting at 17 Rand 45 at the moment. Off the back of yesterday's inflationary news, as you mentioned, we saw the rand sort of dip as low as about 16.98, but closed the day out at around 17.44. So we're still sitting at about yesterday's close on the rand. We are expecting that today's numbers, along with the PPI data out of the US later today, will sort of give a lot more concrete guidance or a lot more direction in terms of what we could potentially see out of the Fed. We are seeing gold sitting at just below $1,700 an ounce. Oil is holding below that $100 a barrel mark, sitting at about $91 a barrel. We know that that might count in our favor in a couple of weeks.
Does this mean another fuel hike could be on the cards? I mean, oil prices inching lower today on concerns of another U.S. Fed Reserve interest rate hike next week.
That is a possibility. However, at the moment, consensus is that we might actually get a fuel cut, given the oil price situation at the moment. We might be looking at about a 1 Rand 50 cut at the start of the new month. So it'll be a second consecutive month of fuel cuts, which would be very, very welcomed and would provide a lot of reprieve to South African consumers. Of course, that's not a guarantee, that's not a certainty, but at the moment it looks like we're in for a fuel cut, actually.
Now, Bowen Properties has published its operational update and trading statement for the first 6 months ending 31st August of 2022. Perhaps help us make sense of those numbers.
So Bowen numbers are coming in really good. It looks as though the indication that we're going to get is that headline earnings per share is going to be up some 40 to 45%, which is going to be very positive for them. Official results will come out at the end of October or so, but they have alluded to a couple of things, saying that revenue from apartments sold increased by some 8%. They also said that they've got approvals for the new smart city in Mooikloof. They're also proceeding quite nicely with their waterfall projects, as well as their development in the Western Cape for about 833 apartments. So when we get the final results at the end of October, it should give us better indication. But with the expectation of headline earnings per share sitting up some 40 to 45%, we expect that those numbers are going to be rather positive for Bowen. Looks like they had a good year.
And on the other end, Canal Plus has significantly increased its stake in MultiChoice Group. What do those developments look like?
So Canal Plus is a French-owned business that's looking to, that has increased its stake in MultiChoice. If you remember, they started out around 15%, and they were recently at about 20.1%. They've increased that 20.1% stake to about 26.26% as well, and that looks to be further strengthening their hold or their positioning at the moment. Obviously, for Canal Plus being French-owned or being a foreign business, the concern there, of course, is how much further are they able to go? We know that there are certain restrictions in terms of foreign-owned companies or foreign companies owning broadcasting rights in South Africa. So it'll be interesting to see how much more of a stake they can acquire. They are looking, obviously, to become a leading shareholder in MultiChoice. This will further strengthen MultiChoice's offering and financial backing. We know that MultiChoice recently announced through DSTV that they would bring on board the Disney Plus bouquet for part of their offering, and for some people that's free, for some people they're looking to pay for that. But at the moment, I think the acquisition or the increase in the stake from Canal Plus is just strengthening MultiChoice's position, giving them a bit of a buffer in terms of stronger balance sheet, stronger financial position. But like we said, the regulatory concerns, of course, there are around whether or not they'll be able to acquire much more of a stake.
Very well. Jimmy Moyaha, thank you so much for your time. Independent analyst helping us make sense of the markets and the latest in the world of business.